Hi, everybody. It's 9:14. Thanks for watching Minnesota Live. As we enter 2023, experts are watching interest rates starting to fall ever so slightly. This graph shows a 30-year fixed mortgage rate from the last 12 months from 3 different sources. Today, they're at 6.2%, down from a peak of 7.32 that we saw in October.
If you own a home, it's likely you financed with a 15-year, maybe a 30-year fixed interest mortgage, but there are some other options out there when it comes to financing. So what are the pros? What are the cons?
Randi Livon has 30 years experience as a mortgage banker. She's with Alerus and here now to break it all down for us. Randi, nice to see you.
Nice to see you both too. Thanks for having me on the show.
I should note that your sister is a regular here on Channel 5.
Yes.
Jody Livon.
Yes, she is.
There you go. I can see the similarity.
Yeah,
the resemblance.
She does tease me about my voice sometimes.
So let's talk about just the traditional fixed rate loans and explain those to people who maybe might not know.
Okay. Well, a 30-year fixed rate loan is really the most common product out there. A lot of people, as they start to see, well, I can pay down my mortgage faster, they want to do a 15-year loan. So for example, on a $400,000 mortgage, that could be a difference between a 15 and 30 year of a $785 payment.
That's a lot.
Yeah, it's a big difference, and that can kill the budget for people. So it's, most people pick a 30-year fixed rate. There are some other options like 2-1 buy downs people could do.
What's a 2-1 buy down?
So a 2-1 buy down is something we used a lot in the 80s when rates were a lot higher.
11, 12, 13%, right?
Yeah. And so what that does is it allows you to have maybe a 6 3/8 interest rate note mortgage, but the first year you'll pay 4.375. That can save you close to $500 a month on again, a $400,000 mortgage. And then in the second year, you'll pay the 5.375. And that'll save you from your note rate of 6.375, about $255 a month.
So is this the kind of loan you would recommend for someone who maybe is trying to get into a house, who is younger, who has the growth potential career-wise to be making more money year over year versus someone who may be nearing the end of their work time and maybe looking at going on a more fixed income?
Exactly.
Okay.
Very good point. It's a temporary fix, more or less. The seller does have to pay that difference, so it could be around $9,000 of seller paid costs. And some people choose to take that $9,000 and put it towards their closing costs and refinance as rates start to come down.
It's a big gamble when you talk about right now, like that particular scenario where you're like, well, I'm sure I'll be making more money in a couple years, given the way the economy is. And when the housing bubble in 2008, when everything happened there, do you think that's a little more risky?
I don't think it's risky because you know what you're going to have afterwards versus some of those loans that were done in the 80s.
That's true.
Yeah.
I feel like a lot of people too are not panicking, but you hear a lot of, oh my gosh, interest rates are now at 7%. I've stopped looking for a house. But we kind of just mentioned earlier, in the 80s and the 90s, people were paying 12, 13%.
Exactly. We got kind of spoiled over the last few years. And this 7% or below is pretty much the average if you go back to the 1970s to now.
Okay.
So it's not so bad. It's just a little bit of a shock from where we were 2 years ago.
Do you find that many people do refinance at some point in the life of a loan?
Absolutely. There's very few people that keep that loan for 15 or 30 years. And we go through different refinance booms, as you'll hear. And with inflation easing, we're probably going to see that again, not too far in the distant future.
I think the Fed's meeting later on this week, they're going to make another decision about interest rates. Where do you see interest rates going?
Okay, well, you know I'm not the psychic.
I know. That's your sister's job, but still.
So I am reading, and there's a lot of predictions that we'll see 5% ranges or possibly lower in the future. It all depends on the inflation easing a little bit more and where we're at during a recession.
Yeah, well, I mean, everyone's hoping that's what's going to happen, right?
Exactly.
And not go the other direction.
Exactly.
All right.
Awesome. Well,
Randi,
thanks for stopping by, Randi.
Thanks for having me on the show.
Good to visit with you.
If you would like more information, maybe you have a question about which type of home loan is right for you, maybe you're looking to refinance, we have posted the contact information for Alerus on our site at minnesotalive.com.